Okay, recording's on. Good morning. Welcome out. Happy Sunday. Welcome to the Market Watch Group weekly market prep, my most favorite of days. When the chimp is sleeping in the cage and we have peace and quiet and calm and all we need to prepare for this week of trading. My name is Scott, of course. I will be your host. These are the disclaimers. We're not brokers. We're not advisors. We don't give advice. We don't give recommendation. This is for education and illustrative purposes only. Today's agenda, as always, market posture. What do we see? What's changed? What's stayed? What's better? Right? We just sort of keep an ongoing look to help provide a foundational perspective that hopefully, I've been asking about this. So I have a few people who've been here for 1 month or so, a few for a few months, a few for longer, that this becomes an integral part of what you're doing, where you're guided, like where you stay in trades that are in a more bullish time, or you take more trades, or you take less trades because it's shown signs of diminishment. But if nothing else, it just keeps us with a good read on what's happening. I will tell you this. For anyone who goes backwards in time to evaluate and says, I did really well in August. What if I was even further back? They're like, you know what? I decided to go back and I'm looking at my results in August or June and July. I did great. I want to make sure I can replicate that. Or maybe you're like, woo, this turned out to be a bad month. Let's take some time, like what Michael's doing this morning for the market, where you just take 2-3 hours and you go back and you just kind of grind through your results and you're like, what happened here? What happened there? But if you don't have the ability to directly, and it's not just that you go back and you're like, oh, well, what did the market do? Well, that doesn't really matter. It doesn't matter that I could look back and say, oh, well, the market did this. I have to be able to know what that's the number one mistake, right? The number one mistake is typically getting the market wrong. So if I go back and I look at when people, historically working one-on-one with traders and I analyze what went wrong, you were too bullish in a non-bullish market. That's what went wrong. You kept trading bullishly as the market transitioned, thinking, well, it might come back. It might come back. And instead of thinking, oh, let's wait until we start to see signs it's coming back, people trade through it. They end up losing more in the transitions and the corrections than they made during this stuff. Then they're scared because they just lost a lot of money. Now they hesitate. Now they're late to the next market, right? They're late. They're waiting. Oh, I'm nervous. I just got beat. And then they're late. And then when they get in, and they catch a little piece of it. And then they all of a sudden get what? Now things are good again. And they start to raise their risk, and they raise their risk just in time for that next correction. Because we look at them. We see these windows, 3 months here, 4 months there. So we hit it, then we relax, then we hit it. and the average trader does the exact opposite. They get hit during the corrections, and then they ease in, and then they get hit, and they can't make money. And it's like, it's not them, and it's not like they can't read charts. It's that they're not connecting to the market conditions. That's why this is so vital, right? This is so important, that this first piece, this is the first domino. We got to get it right. Okay. I had to have a quick soapbox moment. Economic calendar, what's coming up? Michael said, the Fed, we're here. It's time. We've been talking about it, building. It's interesting, right? You guys saw what happened with that, how there was all of a sudden just this huge surge in people thinking half a point. I just, I don't know if that's just like ignorant wishful thinking where they're like, oh, maybe it'll be 50. And you're like, that's oftentimes not good. Right? anyways. Thank you, Sandy. What else do we have? That's the big news, obviously, on the economic calendar. Sector searching. The watch list looks pretty good. I don't know. Let's today, as we're going through it, everyone just at the end of the watch list, vote. We're not going to actually search today. We've sort of kicked that to Tuesdays, right? Tuesday nights we have a good amount of time to do some work in our working sessions, but we need to decide where. So as we go through today and we're looking at what stocks we have in what groups, I want each of you to decide what you feel like is maybe underrepresented as a sector. And then when we vote on it, let's see how much correlation there is there. Fair enough? Let's watch list maintenance. We've booted a couple of things actually recently, so that's good. And we will make notes of potential trades, which I think there will be trades. So, all right. Lastly, trading plan section of the week. Last week, we wrapped up, spent a little bit more time in the working sessions, especially the Tuesday working session. So we went through routines. Here's a quick check-in. Scale from 1 to 10. How well defined in your trading plan are your routines? If you're like, I'm not going to answer and that's my answer, then fair enough. I get it. Michael says 0. He's honest. Oh, I love it. You guys, 6, 2. Okay. All right. All we're doing is just some encouragement to say, hey, let's go get those things in place. All right, let's get into the work. There's our guy, Jer Bear. 3, 2. Okay. Well defined, but thank you, Sandy, for that comment. Well defined, but not adhering to it. So if you feel like you get past, let's say, a 7. So if you get to a 7, that's a good point. So if you get to a 6 and you feel it's not well defined, then you're thinking the next 2 points or 3 points is your ability to have the discipline. I like that. 6 points for definition, 4 points for execution. Yeah. Amazing. Why doesn't Yahoo say futures? I think over the weekend it reverts back to, so we did have futures technically show up. I think it does show them on Friday afternoons after market closes. It kicks back. But remember that oh no, maybe it's because maybe the futures don't trade. The after hours trade. But I think the futures actually shut down Friday, and then they don't come back on until today at 5 p.m. Is it 5 p.m. Eastern? 6 p.m. Eastern, Michael said. Thank you. I always forget which time those futures kick back on. When they kick back on, then it'll revert back over. But right now, I think that the user experience has it show Fridays close until the next futures come on. Right? Does that sound right? If anyone else notices the pattern of that there. So yeah, we really don't have any information until this evening when the futures come on of like, hey, what's the sentiment? It's hard to know. Fed interest rate decision looms critical. Of course it does. We know that. Okay. It used to say, if it said something, it wouldn't really be accurate. I think it's because it's misleading, right? Because it's not really, there's really nothing happening over the weekend until Fridays. And so I think it's better that it doesn't, because until you see it, whatever it was old anyways. Just like this is old. Yeah. Okay. Let's talk about the posture. Pew. Last week, 4.5. We took a 1 point step forward. I hate when I do that. I like to highlight things, and I always highlight formulas. We took 1 step forward, then we took 3/4 step back, and now we're thinking what? Okay. First and foremost, okay, so here's something. If is anyone scoring theirs before, or do you tend to score it real time with me? I'm just curious. Steven likes to do his before. He'll post it sometimes. Sandy scores before. He puts his in. Real time, Michael says, okay. Real time. Cool. I don't think, some people like to do it before and then see what happens. Some people just like to score theirs while talking about it. To be fair, David, both. I would put myself real time. I don't score it before I come back with us. I'm curious if I would score it differently. I like to score it talking about it with you guys. So, anyways, I'm not like saying, hey, you should do it before. I like it real time too. I'm just wondering what we're doing here. Excellent. Okay. Where's my chart? Is it not wanting to pop up? A performance problem was detected. Still? No? Okay, we're good. Not sure what that performance problem was. Last week, if I just zoom in on our current trend. Why am I zooming here? Because I'm zooming in on the green. The green is current, right? The remnants are there. But last week, when we dropped below it, I said we didn't get far enough below that I'm going to score us out of it. So I left it, and you can see that we popped immediately back in. Now, this week is going to be pretty important. Because we're going to be right up against, wow, that is a really thick line. So if we get through this, then I'm going to feel pretty good about staying in that. But if we pause this week, right, and we're sitting on it, it's like, ooh, it's that wouldn't really help us either because we're still in it. I don't know. It's interesting how we're just kind of flirting in this area, but for now, the trend has held. The highs, we're kind of in a bit of an ascending triangle on the bigger term, which is a continuation pattern. What is an ascending triangle? The highs are the same, the lows are still getting higher. If we can break out of the upside, then it's good. But for me, score stays the same. I'm 1.5. Anybody change theirs? What's the range? Let's talk about the range, even on the individuals. Is anybody higher than a 1.5? Remember, it's only out of 2. So if you're at a 1.75, it doesn't get. You're saying it doesn't get much stronger than this, and I'm like, I don't know. It does. It can. Anybody lower than a 1? 1.25? Probably somewhere in that range, 1.25, 1.5. I think we all see it somewhat similarly that the institutions have strength long term. Okay, short term. Last week we dropped from a 1.5 to a 1.25. This was on a pretty steady climb. Pretty steady climb. We went from 0.5 to 1 to 1.25, 1.25 to 1.5. It was a nice move. And then we had just a little bit of a pullback. So have we found the trend, or are we still shifting up and down by a 1/4 point? And if so, did anything happen that would warrant giving it or taking away a 1/4 point? meaning we're saying, hey, did the buyers do something where we're like, ooh, look at the buyers, 1/4 point. That's the thought process. Before we get there, that's something that is important. Okay. So let's go back. Let's go back to 6 months. Nope. 6 months daily. Okay. So from here to here, we took away 1/4 point. It broke down, and it got below the 50, and we got down to here. Well, the next week, 1, 2, 3, 4, 5, we got right back up. 1/4 point back. Do you agree? Took it away, give it back. Sellers for 5 days here, buyers for 5 days here. I think it makes sense, right? Like, that's a logical adjustment. 1.5. Now, does 1.5 make sense? Well, yeah, if you look at from a trend standpoint right now, we don't have. Remember, we need for a fully measurable trend, we need 2 lines, an upper line and a lower line. For 2 lines, we need 2 points per line. 2 lows that we can connect and 2 highs that we can connect. And that's where we sort of lose the ability, right? Like, connecting highs could maybe like we don't have a high yet now, necessarily. Let me see if I can get a drawing back up here. Okay, let's move this out of the way. So I don't really have lines to connect, right? I have a high here, so do I connect this? Maybe, but then what do I connect for lows? This, and you can see it's pinching. You're not always going to have like these clean trends like we did back here. That was a clean one. That was nice and clean for a while. Right now, we're trying to find the trend coming out of this mini correction. We're now like, okay, we're trying to find a trend. We had a huge rally up, that V that got it, and then we sold off, but not back down to here. And now we're like, now what? So, does it move up and come down and start to give me something like this? Maybe that, let's see, I could draw that blue. Maybe it becomes like this. Well, that's about a 1 1/4, 1 1/2. I mean, that's a positive slope. We're just not sure yet. That's what I'm saying. We don't know yet. We're trying to see, does this thing find its way into a trend? Hasn't yet. We're still just kind of giving plus 1/4, minus 1/4 based on buyer or seller accomplishments until the trend shows up. And then we'll be like, okay, now we have a trend. And hopefully our score is right around what it was. And if not, we'll make the adjustment. So yeah, 1 1/2 makes sense. I like that. Questions, comments, concerns? Do you agree? Does it feel like, remember that the strongest is a 3. So we're saying that the short-term buyers have strength, but it's not like we're like, man, they're so strong. We don't even know what to do. We're like, yeah, there's some strength there. We don't know we don't know how strong until we see maybe another cycle of buyers and sellers to be like, okay. Now we have more to work into that trend analysis. Volume. Oh, volume. Anybody new show up? Same crew? Okay. Just want to make sure I didn't miss anyone and not say hello. Let's go down to 1 month. Let's take away some of that extra time. Okay. 50. This one counts, I think. 58 million. Ooh, 60. No, that doesn't count. The moving average here was 62. No. Okay. No. Yes. Okay. So first and foremost, nothing stale is even being looked at right now, right? There's not any days above average. That was close for the buyers, and that was close for the sellers, but nothing that actually came. Then we get here. Buyers, sellers. Those two just sort of cancel each other out, really, when you think about it. But let's just kind of isolate and keep going. Nothing there, nothing there. Definitely the sellers there. Boom. Definitely the buyers there. Boom. And definitely the buyers there. Boom. Do you agree with my markings before I move on? Do you agree with my markings? Yes. Okay. So we're all scoring the same thing. I think sometimes if I break it down further, maybe because this is one where sometimes people are like, I'm not sure. So what's good is, essentially, the way that I'm looking at it right now is we're scoring this. This is fresh. This is what's going to stay with us. These two basically cancel each other out. So whether we say it's if we include those, it's 2 selling, 3 buying. If we don't, it's 1 to 2. It's definitely positive. Are we all in agreement with that? We give a positive score to the tie when we're like, hey, so this is definitely positive. It's like a firm 1/4 of a point for me. I guess the only question would maybe be, did anybody give it a 1/2 of a point? I'm not going to. I think it's a good, solid 1/4 of a point. And it's a good foundation for us to work off of going forward, because this little patch is a positive patch, and that's going to stay with us for 2 more weeks before it moves over into that stale place. Everything else can just sort of fall off, and it's not necessarily relevant. So sanity check. We started here. We ended here. We have a nice, steady, positive slope. Yeah, that all makes sense to me. 1/4 of a point. I like that. That's a nice 1/4 of a point. It's only a 1/4 of a point from scoring, but I want you to think of the implications. What we saw there was the buyers winning the tug of war. That's important. That's important. We see the tug of war happening, and we're like, look at the buyers. They came through. They did what they needed to do, right? They got overcome here. They tried to push it, and they got overcome. It's like it tells a story, right? The buyers are like trying, and the sellers are like, no, we're not letting that happen. And then the sellers are like, in fact, we're coming down here. And the buyers are like, nope, we're right back up. And when you look at the distribution of volume, the buyers won. They're like, okay, that's significant to us. That's significant to me. That's a good part of the narrative, right? Okay. Boom. Halfway done. All right. Let's go get to the major market. Major market. Dun, dun, dun. Bam. Okay. Major market. Our score. A little trick I've noticed lately. You always just come down here and click this, make sure it's all the way to the right. For whatever reason, there's been a couple of times where I've analyzed, but I analyzed something that was just 2 or 3 days. If you go 2 or 3 days back, it changes everything. So you got to make sure that you're all the way over, and then you get the full breadth of the analysis. First and foremost, what are we working with here? I believe we're a 1/2 point. The NASDAQ has, stayed in a leading position. Whoops. Okay, so who do we have here? We have the NASDAQ and the S&P, followed by the Russell, followed by the Dow. How do we interpret that? That's a bullish foundation. The trend is up, you can see, from the left side to now, and it's led by what we would expect to lead, and the large caps, we are in a lagging position as expected. Yeah. Now we go down to 133. What's the shift? What's gotten better? What's gotten worse? Still S&P and Dow, or still S&P and NASDAQ in front, but you can see that the small caps, they got shook. You can see a lot of that happening here. There was some hell of a volatility in there. But in this position, they're in the fourth place, which is less strong, but still bullish to have the NASDAQ in the first position and these two close. Still close, but less bullish. All rising. Good point, Sandy. So it was a little less certain. We didn't move from the 9-month perspective to the 6-month perspective and say things got stronger. We said things are still strong, but there was a little bit of a question in this first shift to lower time frames. Then we go to 66 days. Now this is weird. Yeah, this is strange. Like on 66 days, the NASDAQ is at the bottom because the NASDAQ had led the correction. It had more than a correction. But when you look at like the Russell's now leading. That had you confused? Oh, it definitely. We love when things just fall into these perfect analytical setups. But more often than not, we're actually having to make do, if you notice, right? It's as much art as science here. So the Russell is leading, but the Dow's up there as well. What's the interpretation? For me, the tide is rising. So everything is rising. All boats are rising. Right? When I look at the Dow and why it's there, I don't look at it and think that's a strong defensive move. It was stable. Look at the Dow's line, and this will help you to kind of get a sense of why we look at the Dow the way we do. Look at the Dow during the correction. It didn't spike up the way that the Russell did, and it didn't drop down the way that look at the amplitude, right? Versus the amplitude from high to low on the Dow, here to here. High to low on the Russell, here to here, right? Significantly more, double. High to low on the NASDAQ, here to here. Like this is the ND. This is the IWMs, and the S&P it had more as well, right? From here to here, S&P. So that's the Dow just being stable. That's it. Stable. Interest rate cuts imminent, yes, which are going to affect who? These guys. Which is why they're, right? There's been a lot of talk about it and a lot of back and forth on it. But a lot of the expectation is once the Fed starts, then that's the policy. It's what they would call accommodative or a dovish policy, meaning we get one and then another and then another. And that's what's helpful, right? That's the whole don't fight the Fed mentality. So, and to some extent, there's some of it already baked in, but it's how much is baked in. Yeah, a quarter of a point I think is definitely baked in, but the rest of it doesn't tend to be. Which of these am I using? There we go. Let's drop down. So what do we score it? I'm going to leave mine the same. Nothing changed. It's still bullish. 0.5, right? Because here's the deal. If you were to say, I'm going to score mine at 0.25, I'd be like, oh, why? What's the rationale? What was the catalyst that we have to be able to identify something where we're like, well, because the X did Y, I am Z. That's what I'm looking for. Because the Dow rallied to a leading position, that means it's more defensive. Therefore, I am right. I need that ability in this analysis. It's not just like an overall feeling that we have. We have a half a point. That half a point has come from the foundation of the NASDAQ in a leading position, the Russell being there as well. And we're saying, hey, that's now what? I'm going to leave it. Yes, there was, Michael, we're going to see that here in just a minute. He said, I heard the volatility last week was because some are projecting it all of a sudden surged like by double. So, okay, so I'm going to leave mine alone. Is anyone changing their score? If so, to what? And while you're telling me that, I'm going to jump down to the 22-day. 22-day is just lockstep. Lockstep with one. We had a little bit of a drop by the NASDAQ, which has come back, and we had a little bit of a surge by the Russell, which has also reemerged. Yeah. So I think this supports our half a point score. So for me, I'm going to keep it as is, half a point. Let me know if yours is higher, lower, the same. Same for Bob? Okay. All right. As you're typing, I'm going to go into sector rotation. Sandy went up a quarter, but to a 0.5. So she was a little bit below. I don't see Press. I like your comment. Press said the paradox is that the same market signals that would signal half a point cut are the same ones that the economy are slowing. I actually think that it's wishful thinking more than defensive thinking. I think it's wishful thinking like, oh, they can hit it with a half to make sure. But I just, you know what I mean? I just don't think that those with that wishful thinking understand. That's where it's like, what do you do if the dog gets the car? You know, the dog catches the car. You're like, oh, I got it. Now what? So, but maybe you're right. It could be that for me, when I look at the things that we look at for jobs, I tried to walk through and we even saw that whole SOM indicator thing was overblown. It's not. Jobless claims are still sitting around 225. Someone was like, "Oh, jobless claims were up to 230." I mean, geez, from 225 to 230, that's not up. That's just the same. Yeah, it'll be an interesting week. Let's do sectors. Sectors are so interesting right now. Financials at the top, along with utilities. What the hell? What is going on? Then we have industrials. We have the market itself. Where are you guys? We have industrials and communication services. Fear and greed index, neutral. Okay. Yeah, there was a good jump in tech for sure. Energy's down below. You can see discretionary's been lagging, but they jumped. You can see technology lagging. They jumped. It's pretty mixed. I mean, I have a growth sector, then I have a defensive sector. Then I have a growth sector, then I have a growth sector, then a defensive sector. So, all right. Now, here's the thing. We were quarter point, then 0, 0, 0, quarter. This is pretty neutral here. The sector rotation's pretty neutral. That's the one part that I would really like to see kick into gear. Where if for our score to get higher, I'd like a half a point back there. If we get a half a point in sector rotation, that means that we had money flow going into our typical sector leaders, technology adjacent communication services, financials, industrials. consumer discretionary. When those 5 are all working, that caps us off and puts us up into 5.5, 6, 6.5 territory. That's where we're really feeling good about market conditions. We're not there yet, clearly, but are we even going to keep our 1/4 of a point? That's the question we're asking right now. 133. So it's such a weird, until we get to, it's going to be like this for another couple of months because of this first jump. If you were to just, and that's why it happens this way, but we're going to see a little bit of we're going to see a little bit of some defensiveness still out of utilities. Then we have staples, also defensive. Now, this is at 133. We don't score this because we know that what this looks like is going to shift as well. But we have then financials, and then it gets a little nasty. I think we went negative, right, for a minute. 66. 66. Who's on top? Utilities. Who's second? Financials. Who's third? Staples. Healthcare. Industrials. And discretionary. It's pretty mixed. An argument can be made that with the utilities popping to the top, you might take a 1/4 of a point away and take it straight back to 0. I'm going to leave mine at a 1/4. It's mixed amongst sectors. So why slightly positive? Because we're still more bullish than not. Yeah? Because I still am more bullish than not. So I'm gonna give the buoyancy strength. That 1/4 of a point is the buoyancy of the entire market. The entire tide is up and it's bringing everything up. But it's pretty mixed still. It looks kind of 0-ish, but it is slightly more positive than not. So I'm gonna go 1/4 of a point. Okay. So here's the thing is I'm going to leave it. If I was going to change the score, I would probably validate that here on the 22-day. What does the 22-day tell us? Should be reading. What should be reading that? Okay. Who's on top? And look at that. On the 22-day, discretionary finally is popping in. Then what? Then we've got staples. Then we got financials. Then we've got energy. So same thing, mixed. But it is nice to see discretionary, and we do have a recovery maybe showing up from technology. Yeah. It's so funny because I know, right, Press? I think that's the point of this analysis for me is exactly that. This is going to show me things I would not have seen coming. And so that is not weak. Agreed. All right, so I'm going to leave mine the same. Lastly, but certainly not leastly, let's look at the VIX. We dropped it last week, you guys, if you remember. I think it's going to go up 1/4 of a point. Tech has left the building. It kind of has. And you're like, where are you, Tech? We need you. Don't leave us now. Here's the VIX. So, on price, we went down and then we went back up. But on the VIX, we didn't get it all back. We got very close. But not all the way. We did get back into this prior little basing range. You believe my scale was shifted for which analysis, Stephen? Which time frame are you saying that for? I'll go back. Tell me which time frame you think. We validated it at least twice. Oh, you think for 66 and 22? Yeah, I'll go look. So I'm not gonna give it the quarter of a point. I'm gonna be a stickler. It didn't make it all the way back down to this low. If it had, I would have given it the quarter point back. But it just didn't quite do it. We spiked up and didn't get it all back. So I'm going to leave mine the same. At a 1. So what will I be looking for? If we come up and then we have a lower high, that's fantastic. That would give it more. If we take out that low, that would also do it. I mean, so we could get a quarter point there, and that would get us back to 1.5, something like that. Can we give it points for trying? You can give it 0.05. That's it. You can go to a 1.05 this week. Okay, yeah, no. I wasn't sure how I was going to score that one. Oh, Steven, you're right. It didn't get all the way, but it's the same, I think, analysis. Discretionaries first, utilities, staples, that's defensive. So it wasn't all the way over, but it definitely is the same read. Yeah, this one was all the way over. Utilities was at the top. Then we had financials, then we had staples, then we had discretionary. Yeah, no, I think we were there. We weren't all the way on the 22, it looked like, but it didn't change any scoring. This is the same. And so my net final score is, I'm a 5. Good solid score. That's me. 5. Michael's a 5. If you think you're the highest score, put it out there. If you think you're the lowest score, put it out there. Or if you just want to put yours out there so we can kind of get a sense of it. I'm still working on the best mechanism to create like a composite score. So it's just kind of informal for now. Back in sync at a 5. All right. There we go. So what does that 5 mean? It means we feel pretty good about conditions. The VIX is under 18 empirically. We feel pretty good about the Fed. I mean, this is a pretty solid score. We should be looking to trade bullishly, hold bullishly, enter new bullish trades. Quick Fed watch look. What happened? 50-50. 1 week ago was 30-70. I love it. Press has 2 operating theories. In the short term, we have economic weakening prompting the Fed to cut rates, which is short term to midterm bullish. Okay. And it might not even be economic weakening, but economic less slowing. I would put slowing, and then I'm going to agree with your verbiage 100%. Because weakening would be like, to me, is negative, whereas slowing is less positive. Is that fair? But I get what you're saying. And it's a great assessment. There are a few signals telling us that a recession is imminent. Yes, I'm going to agree with that too. People still point to the yield curve. I'm like, that thing went inverted like 18 months ago. It's like, what are you talking about? 24 months ago. I agree with that as well. There's nothing for me recessionary right now, and I'm looking for it. We're looking for it. That's a great assessment. Beautiful. Oh, did it uninvert last week? I didn't even notice that, Press. That's so funny. Thanks for pointing that out. I got to go look. Okay, so is anybody in our camp over here? Do you think that it's moved to 50? I am firmly at 25. No. It's because okay. Love it. All right. Okay. Man, I was having good luck with my pen, and now... Okay, there we go. Calendar. We know what it is. We have some sales and, a couple minor reports on Tuesday. It's this. It's Jerbear. I'm pulling for Goolsby to get a speaking position somewhere in there. I'd like to hear what he has to say. All right, let's go look at our watch list. Sandy just posted our cyclical. Moving into late September, early October, there's some shakiness. Last year we felt it. This year with the Fed, the Fed supersedes anything cyclical for me. But it is absolutely important to keep our eye on that as part of what we are putting into the soup, right? We just got to put it in there, see what it tastes like. All right, let's start at the top, work our way down. I need a note card to make some notes to myself while we're going here. And I'm still putting Apple on the list. Just because it paused doesn't mean anything. In fact, I thought about it even from a, if I got a good day on there, I could come in with a stop loss underneath here. The thing about something like a Heiken Ashi, Federal Open Market Committee, Sandy, which shortens to the Fed. So iPhone 16 is AI capable, probably going to be, yeah, right. Just different ways to say it. Yeah, I think it's, so here's what I was saying is that as far as a stop loss, if I entered anything here or here, I'm not putting my stop back below this low. I'm now in the momentum. If I entered on this day or this day, I'm not going to put my stop loss back down here. I'm putting it here or here because I'm in the momentum. That's the difference. When you come over to your Heiken Ashi and you say, hey, I've already kicked into this stage, I'm out of this consolidation and into this, then I can be a little more aggressive with how I put my stop losses. Hindsight with the stop loss? For me, it's analytical because it's, right, this is an indicator. So it's moved into this position, right? Can I get a pen back up? You're looking at, from a pattern perspective, it's like, look at every time you've moved out of a consolidation into white. Here, here, here. Now, if you look at this one, this didn't work. I might have actually traded this. I can't remember now. No, I didn't because of earnings. That's why it didn't work. That's why. I was like, wait a second. Did I trade that? No, because of earnings. But yes, for me, analytical for sure, Michael, 100%. That would actually kick it out of a... That would actually kick it out. You can see when I move it back how much more smooth those Heiken Ashis look. But I have to start on price action before I move to those. Aflac's viable. Like, it's open for business. Did anybody trade into that one? Because I was absolutely viable. Still viable. Like, it's. I don't think this one has turned. Barely turning into this next thing. So would you look back and be like, I don't know, I might be too late? Right? Come on. It's not too late for anything. If we got even half of this move, you're not too late. You've got a nice little trade ahead of you there with an ability to contain risk and then adjust it just like you would there. So no, I think that what we're seeing validates everything else. Anyone still in Amazon? Let me know if you are. AXP. I got to get out of the Heiken Ashes. That Amazon's paying. AXP was too much. That was the problem for entering on AXP. I'm never going to enter when it looks something like that. Like, where do you put your stop? I mean, it was just so much in there. So yeah, wait until the next one. BAC setting up. If you like it, BAC is setting up. Still hovering around the 50. Doesn't have as much strength as some other ones. BK. Yeah, I just think that the financials kind of were a little bit crazy in their signaling. BLDR, it was here. There's the signal. And then we popped. Carrier. Here and popped. Caterpillar. Yeah, the industrials kind of got shook and then they took. So it was like if you look at this, that was a pretty big sell. Like it came through there and it came through the 50. And then they pretty heavy return. Which is good. Yes. Michael said cup and handles. And you could look at it didn't quite get there, but still, I mean, yes, a lot of cup and handle type patterns. We've been seeing those pretty regularly, in fact. Oh, CL is ready to go. We know there's still some strength there. I'm going to let's see, I forgot to make my notes. BAC I liked. I feel like we're a little late on the industrials, maybe Caterpillar, but I feel like you're chasing the industrials right now. Staples look good. It's setting up. CMG maybe hitting some resistance. It's getting iffy. We'll see what Monday brings. Costco gave its signal. Fastenal got up to a new high. Very nice. Bitcoin fluctuating. Gold was bullish. Look at gold. Where's the bullishness from gold coming from? I think GM is viable, actually, if you wanted for something consumer discretionary / industrial adjacent. I don't think this has turned yet. Oh, it did. So so what would that mean? If I could enter it in this range, I would still probably put a stop underneath here. If it was in this range, I'd probably just put the stop right underneath yesterday. Well, I don't know why I went that direction. If I was getting in a little higher, I would probably be in right underneath and possibly under that day's Heiken Ashi low. So, yeah. And same kind of a thing, right? You might think, oh man, this thing moved too much. We're too late. Were you too late? Or did those Heiken Ashis allow you to just stick with this thing all the way up? This one, Michael, definitely a cup and handle. Boom, boom, boom. What do we look for? First the cup, then the handle. And let's go back. Oh gosh, I'm at time. All right, I'm going to hurry. Google, no, still needs to do more for me. Goldman, same with that one, still has to do more. Home Depot, we were a little too late on that one for retail. ICE looks good, but there was a signal that you might have taken on NDAQ. We'll see that one soon. IWM moving. JP Morgan, no. KKR. Coca-Cola, you could add that one to the discretionary list. MasterCard, too late. McDonald's, nothing there. Meta, maybe Meta. In a continuation trade type fashion. MMM has started moving already, so I would say Coke and CL better. Morgan Stanley, I would actually put Morgan on the list. I think that one looks like it could go higher low. There's some movement in the group that I like. Microsoft is strong, but we're too late. But if we get a pullback, I'd watch for that. That could pull back this week, right? NDAQ, we're in. We like it. It's making some money. Looks like it could continue on its trend. Do we even have a Heikin-Ashi yet? Maybe. Yeah, lucky. There you go. Very nice. Netflix. Netflix looks kind of bullish, right? And let's look at Roku. This is one that Michael said take a peek at out of the same grouping. Oh, yeah. Strong, but a little late. Right? Unfortunately, you can see it gave some signals popping out of here, and now it's up. But I do like it. I do think we could add that to the list. Where were we? NVIDIA? I think NVIDIA was viable. Did anybody make any chip trades last week? I think Miguel did. Yeah, I thought about putting this on, but I was like, putting it on as an alert. I actually did take that one. PGR, that's viable. Kind of a weird signal there. PLTR, still going, still grinding. I've got one little piece left. Anyone else? Still riding it. Seeing if it can get on up. Get on up. That was a nice one for sure. 50% last week on a video. Good. Some good trading going on. There's still plenty of people who are shy. Listen to it. Listen to CNBC. Listen to them. Oh, it could be this. It could be that. They're clutching pearls and running around. And what are you doing? You're like, hey, I see plenty of bullish, so I'm trading bullishly. Like what? We see it here. We know the NASDAQ wants to come try to make a push. Rocket Mortgage? I don't know. That was a new one, and I kind of feel like I'm still going to keep watching it. RTX. I think there's some viability in RTX still. I've made such terrible notes on my card, you guys. I'm going to have to go clean these up before I put anything on paper. It's so bad. So a long base, a basing pattern. Did Roku? Let's go back. A basing pattern is when they're going to be just in like a tight range. See, I don't really see it there. The last place that I actually felt like a good base pattern showed up was on the VIX. So a basing pattern is going to be, things that look like this. That's a basing pattern, right? And so if you've ever used, I can't scale out of this pattern now because of this. This thing will look forever skewed. I can't make it look good because of that stupid. Talk about clutching pearls, Sandy. That was the great pearl clutch of August. But when you see them move into tight ranges, what would make it bullish? Breaking out. So the indicator that people will use for that kind of a pattern are Bollinger Bands. If you've ever heard of those, I'm going to put them on. They're going to look terrible on this, but Bollinger Bands. So Bollinger Bands, this is perfect. When they do this, and you can see the bands are just so tight right on top of them. A lot of times the bands have all this gapping space between it. But as these bands tighten up and they get tight like this, that would show you a basing pattern. And so think of it like a spring, right? I have a spring and I'm squeezing it together. And I'm pushing it and now I've got that spring. When you let go of that spring, you don't know if it's going left or right, but it's flying, right? That's the concept. So it would be the same concept, Press, if it broke the base to the downside. Then we think that's where the spring is going. Does that make sense?
This is a reminder.
That's so the basing pattern is everything kind of just pushing into that tight range, and it's building kinetic energy that when it pusts out, it's gonna go that way. Anyway, that's cool. I'm glad we got to talk about that. Look at us introducing a new indicator. We're 6 minutes over. We're introducing new indicators. What the hell's the matter with us today? I'm taking it off, though. I don't love them. So if you're ever wondering, put a Bollinger Band on. If it feels real tight, then yes. And then think, okay, if that thing breaks out. Sometimes what people will do is they'll put like a buy entry above and a sell entry below it so that as it breaks, they catch it. The problem is it can pop up and back in and give false signals. Where were we? Tesla. Tesla looks okay. TSM got some strength. NVIDIA and TSM are my favorites. UNP. The trend is there. It got shook like the rest of some of the industrials. It has not recovered like some of them, but it's actually not far off. I stayed in mine, and I'm not down much. Down some, but it's not catastrophic. And I actually am going to let that one ride just a little longer to see if it can recover with the rest of the industrials. So there you go. USB. I think that there's a setup developing on USB. I like it. There's obviously some strength in financials, but it's kind of a funky group. The dollar is down. Sorry, Press. I saw your comment earlier. If you didn't see Press's comment about gold, it was a good one. Weakening dollar, Fed cuts. That definitely true. Which, those are things that help the stock market. Weakening dollar. Walmart, strong. There's nothing there for us. That thing's just running. Real quick, let's go through basic materials. I mean, there's just a lot of strength across the board. Look at the strength. Communication services, not in energy, which is good. Keeps inflation down. Financials, look good. Industrials, good. Technology, recovering from the correction. Staples, steady. Utilities, steady. I think they look more steady than defensive. That's just me. More steady than defensive. Healthcare, steady. And consumer discretionary, almost the cup. Almost the cup. If this thing can get into the cup and then a handle and then breaks the cup, that'll be great for the market to see consumers discretionary coming back into favor. Okay. Lastly, for the last 2 minutes, we are working on our trading plan. Your routines should be well flushed out. Where are they? They're down here. I gave you, in the sample trading plan, I gave you a bunch of good things to consider for how you do routines. These aren't all things that I do. Some of them I don't. I have, and then got rid of them. But now we're moving on to record keeping. And you'll notice on record keeping, I don't have anything. That's it. There's nothing here. Why? Because it's the trade log. We need to be filling out the trade log. So this week on Tuesday, we're going to spend some time going into the trade log. If you haven't been filling yours out, I'm going to convince you to become so there was a quote If you haven't done it, download your log and get going. There's a quote by a guy by the name of Jack Schwager. He's very Schwagerly. Jack Schwager has written several books. Market Wizards, Stock Market Wizards, New Market Wizards, Hedge Fund Wizards. I think there's another new one that just came out. Is there a new Wizards book? I think there's a new Wizards book. Basically, this guy gets interviews with some of the most successful speculators, investors, traders. Literally, like one of his books interviews like Bernard Baruch, like guys from the 50s. But very interesting books because it's not about like, oh, they're going to teach you the secret. It's about common threads and journeys and what ultimately helped lead to their success, pointing us to psychology, pointing us to risk management. But more than that, Schwager had a quote. He said, "Show me a good record keeper, and I'll show you a good trader." That's another common thread, right? Why? Because you're blind. You're driving down a road with a ditch on either side, and the person sitting behind you has popped up and covered your eyes, and you're still driving. That's what's going on if you're not keeping records. If you don't have a strong set of record keeping, of analytics, then you're driving blind. It is. You're going to end up in a ditch. We need to be able to make those adjustments. Sometimes it's just a little bit here and there, but it's happening. All right. Thank you for the extra 10 minutes. I will see you guys tomorrow morning, 15 minutes before market open. And we will talk about signals and what's going on and what we like and prepare for Wednesday's Fed meeting, and we'll go from there. Have a great rest of your weekend. And as always, happy trading.